This conference will now be recorded.
So yesterday we learned about uh, three topics. We have refreshed about one is collections, another one is collection letter and interest notes. Okay, so collection letters I have used and I have implemented, and whereas interest notes I have not implemented, but it is same kind of thing. So interest calculation will be calculated. So if it is required to the client, definitely you can provide that information and you can provide the information to the client and you can implement that one. So today we'll try to understand about year-end process. Today we'll try to understand about year-end process. So what is this year-end process? First, let us understand the concept. What is this year-end process? Here, year-end process means once the financial year is completed, I need to transfer the balances from last year balances to the new year. Last year balances to new year. That is year-end process. So yesterday or day before yesterday, from 2-3 days, I have explained month-end processes. Month-end process, it is like foreign currency revaluation. Foreign currency revaluation you need to run. You need to run closing, inventory closing. Of course, inventory closing I have not explained. I will explain you. It is a topic of T&L, but we will understand about this inventory closing both together, finance and T&L. Okay, I will explain you. This is a pending topic for you. And payable entries, payables are provisional entries should be completed. Any any invoices like sales invoice or customer invoice or vendor invoices, anything is pending, or any journals should be completed. Okay, these are the month-end processes. So every month, I mean to say every first week of every month, any organization, they will generate trial balance and they will look at the balance like a trial balance, and they will look at the what is the net gross profit, not net profit, gross profit, how it is. Okay, P&L and income statement, P&L or income statement both are same, balance sheet or trial balance. These statements are regular statements, will be generated by finance department. They will observe how the financial growth is going on. So before generating that financial reports, these things should be done by accountants properly. Okay, except inventory closing. Of course, this inventory closing will be executed by inventory team like stores department, but finance team, they can view whether it is executed or not. At least they can view whether the inventory closing is done or not. So many times I observed many clients, they will not run this inventory closing because this is the job or responsibility for stores department, but it is affecting financials in balance sheet or trial balance sheet actually. So because finance department, if they are not observed, then stores department, they will leave it. So I observed this information. Many clients, they are not running inventory closing at all. Then it will not impact heavily, but it will impact little bit. That is depending upon the situation. So it is the, as per the best practices, inventory closing should be executed periodically. Okay, so this inventory closing you are going to learn in another couple of days. You are going to learn this inventory closing along with finance, along with T&L team. Okay, fine. So this all month-end processes should be completed. All the month-end processes should be completed. Along with this one, for year-end process, new financial year should be created. This is the prerequisite for year-end process. This is must. If you have not created, it will stop year-end process. You cannot run the year-end process if in case new financial year is not created. These are best practices. System will not stop whether you have mapped or not. But this one, it is must. You need to have new financial year. And one more thing, this year-end process, suppose you are practicing in demo system, in USMF, suppose, then the data, like already some sample data was created by Microsoft in USMF, suppose in 2015 and 2016. The sample data is exist in 2016 and 2015 and 16. Then if you are executing year-end process for 2020, it will not be processed. It will not be processed. So it is must. You need to run in a sequential manner. In a sequential manner means from 2015 to 2016, from 2016 to 2017, 2017 to 2018, in a sequential manner you need to complete. Then the last year balances will be created as a opening balance. In real time scenario, in business or in front of the client, this will not be a problem, because anyhow once the year is completed you will run the year end closing. Whereas in the demo data, the transaction data is exist in 2015 and 2016. If it is not executed year end process, because it is not required, it is not executed, suppose in this case, then if you are running for like year end process for this year, it will not show the results. Understood the concept? Okay, so the prerequisite is the year end process should be completed if the data is exist in the previous years. That is also one of the prerequisite. And new financial year should be created. Fine. So you are telling like year end process. What is this? Let us understand. Suppose bank balance. Bank balance. There are two examples I will take. One is suppose USA. Another one is India. Both are same, just for better sake. Here this is 01 Jan 2019 to 31st December 2019 to 01 Jan 2020. You are transferring balances from this date to this date. Okay, if it is India, 01 April 2019 to 31st March 2020 to 01 April. People will think next year means 2021, not 2021, it is 2020 only. So from 31st March to April 1st. 31st March to April 1st. Okay. So bank balance, suppose on 31st March in India, take the example, bank balance. Suppose I have bank balance of suppose 15 lakhs. Then this closing balance of March 31st should be transferred as a opening balance on 1st April 2020 in the system. That is opening balance. Closing balance of the last year, closing balance of the last year should be transferred to the next year. Here, year means it is only one day. Observe, this is also 31st December 2019 to Jan 1st 2020. The closing balances of the last year should be transferred to next year. So this will be happened for all assets, all asset balances, liability balances, and equities. These balances only will be transferred from last year closing balances to next year. Whereas sales revenue, cost of goods, expenses, other incomes, appropriation, these balances will not be transferred. What it means? These balances means, suppose there is a travel expenditure. The travel expenditure will not be transferred from this to this. Travel expenditure will not be transferred. It will become opening balance is zero only. For this year, for USA, like this, from 31st December to next year Jan 1st, travel expenditure, petrol expenditure, or salary expenditure, or any expenses, any revenue accounts, all these accounts will not be transferred to next year. Whatever the expenditure is happened for the last year, that's it. Then what happens? This is revenue, that is sales amount. Here we know, like, 1 means assets, 2 means liability, 3 equities, 4 sales revenue, 5 cost of goods or purchase expenses, 6 expenses, 7 other incomes, and 8 appropriation. This net balance, this is revenue account, this is income through sales, this is expenditure through purchases, and this is office expenditure. To run my business, I need to pay rent, I need to pay electricity, I need to provide facilities to my employees, all those things. And this is other than sales, if I'm getting any revenue, interest or something. And appropriation means here you are going to arrive the calculations. So this, in this, it is gross profit I will arrive. I will get gross profit. In this appropriation, I will get net profit. So all this combined together, and I will get the final profit of the company. On this day, if it is India, on 31st March 2020, I will calculate the final profit result, the final profit. Here also on 31st December. It may be any date. Actually, the last date of the financial year, you are going to arrive the final value, the profit or whatever it may be. Understood? Here, from this, you are arriving a net profit. So these balances will not be transferred to the next year. The, like, only asset balances, liability balances, and equity balances will be transferred from last year to next year, because Suppose I need to receive 20,000 from one of the customer. Next year, it will not become zero. I need to receive that whatever it is, I need to receive from the customer. In the same manner, whatever the amount I need to pay to the vendors, that I need to pay. So these balances will be transferred to the next year, and these balances will not be transferred, and it will arrive to the net profit of the organization. It will be transferred to, this amount will be transferred to retained earnings. So there will be one main account, one ledger account or main account in three series. In three series, usually it will be created in three series. Retained earnings, that account number may be anything. 99% people will use the word retained earnings. It is a commerce word, retained earnings. That means the profit or loss, whatever it may be, the last year balances will be calculated and it will be transferred to the retained earnings. Understood? Any doubt here till now? Any confusion? Anything? Is it clear? Yes or no, please, to proceed further. I hope it is clear for you.
Yes, it is.
Okay. Okay, fine. So whenever it is transferring in the financial year, like long back I have told you, I have informed you, in the financial year there are 14 periods. There are 14 periods in the system. There are 14 periods. Okay, what is this 14 periods? Period 1 to period 12. This is for any financial year, period 1 to period 12. Means if it is India, it is April, May, June, July, like that, March. 12 periods. 12 periods. If it is USA, it is Jan to December. 12 periods. But extra in Dynamics AX, you will find period 0, and period 13. Period 0 and period 13. What is this period 0 and period 13? So period 13 is arriving the closing balances, and it will be transferred to the next year opening balance. So in this, actually, if you observe, let me show you the financial year. Long back I have shown, but let me show you. General ledger, give me 1 second. The system may be, I need to refresh. So Pandu, are you facing any challenges in net? Pandu, are you able to hear me? Okay, he is arrived. Fine. So let me show first financial year and then we'll discuss. General ledger, calendars, fiscal calendar. Financial year is in the system, it is called fiscal calendar. Observe here, So one is opening. Opening period is April 1st to April 1st only. Next, operating normal, April 1st to April 30th, May 1st to May 31st, June 1st to June 30th. We know this is our calendar. And last, there is a closing. So operating is March 1st to 31st March, regular 12 periods. Extra period is there, closing, that is 3/31/2020, 3/31/2020. If you look at this one, the last day of the financial year or fiscal calendar is exist in two areas. In the same manner, for opening also, April 1st, it is available in opening balance, opening, and here also. Here also, see, April 1st is available in both. So whatever the transactions you are posting from the system, that transactions will be stored in this one. This is April 1st to April 30th. Suppose you have posted any journal, any vendor invoice, vendor payment on April 1st, it will be stored here. And what is the purpose of this one means the last year balances, that is March 31st, 2019, 31st March 2019 balances, closing balances will be transferred to this period opening balance. It will not merge here these two. You are posting some transactions here, and this opening is the last year balances will be transferred. In this also, here also, suppose here opening, look at this one, period 0 opening. In this, what is happening, 31st March 2020, it is not 2019, it is 20, because one day before 31st March 2020, the balances of the closing period will be transferred to opening balance. Understood? So where I can see, like whatever I'm saying, where we can see, if you go to trial balance, general ledger, inquiries and reports, trial balance. If you click on this one, calculate balances, it will show opening balance. So on 30, suppose in this it is Jan to December, this financial year is USMF, Jan to December. So January 1st, if I have entered any transaction directly, debit or credit, it will be available in this only, it will update here only, debit or credit. But opening balance is, if you run the foreign like a year-end process, then last year balances will be transferred to here. So for understanding purpose, let me show the 2015 balances. So in 2015, opening balances are not there. Let me verify in 2014 any transactions exist. So in 2014 there is no balances. In 2015 I'm showing you. In 2015 it was started transactions. Now the closing balances are exist in 2015. If you observe here, 2015 closing balances are there. This closing balance of 2015 should be transferred to next year 2016 Jan 1st as a opening balance in this. So let me run this year-end process. Let me take a duplicate. So here, look at this one. There are 1 series, 2 series, 3 series, 4 series. So 4 series balances also exist, 4 series and 5 series. But if I run this foreign currency if I run this year-end process, what happens? This opening balances for 2016 will be shown, but for only up to 3 series. For 4 series, it will show 0 only. So let me execute this year-end process. So general ledger, year-end close. Okay, I will write down the path, year-end close. So in 2012 and D365, in 2012 you can execute for like this year-end process for that company only, for that specific legal entity only. Whereas in USMF you can execute for other legal entities also. Okay, I will explain you the difference between 2012 and D365. In 2012, what it is, in USMF you can run only for USMF. You can run only for USMF. But whereas in D365, even if you are in USMF, if we have permission for other legal entities, then you can execute other legal entities also. You can execute this year-end process. Let me run this one, year-end process, fiscal year close, USMF. I'm executing for USMF. I have option to select other legal entities also in D365. In 2012, that is not available. You can run only for that legal entity only. I mean to say for that company only. Okay, click OK. Now financial year 2015. I want to run for 2015, because if you execute for 2015 and this 2015 closing balances will be for to 2016 Jan 1st opening balances. Okay, in 2016, if you observe, in 2016 opening balances are not exist. Look at this one. Oh, it was executed already, sorry. 2016 it is already exist. So then look at this one, it is executed. For opening balances, look at this opening balances, it will not be shown for 4 series, 5 series, 6 series. Opening balances will not be there. Look at this one. This is still 2 series only, 3 series. Now from 4 series you will not find any opening balances, because as I told you, this 4 series, 5 series, 6 series, 7 series, you will not find any balances, any opening balances. Only you can observe 1, 2, 3 series. Understood? Let me verify for the next year, 2017. Whether the opening balances are exist. Yeah, exist. For 2018, exist or not, let me verify. So for 2018 it is not there, but in this there is a small bug. I will show you the running process, but I will not get this opening balances for the version 2010.0.13. This is 10.0.13. Okay, there is a small bug in errand process. Microsoft is working on that one. Okay, so I will run this process, but my bad luck, it will not I cannot show in this opening balances, but I will execute. Let me show you the process. But what happens, it should be 2017 closing balances should be shown as a opening balances. Okay, 2017 closing balances should be created as a opening balances, because in 2017 closing balances are there, and the opening balances should show here. Okay, let me run this process for 2017. Okay, I'm executing 2017-1, something you can enter voucher. Okay, click OK. If I execute, then it will be a batch process. It is running the batch job. So that batch job you can see from system administration, batch jobs. So this is run fiscal year, sorry, run year-end process. So if I'm entering this run and apply, it will show the job. So executing, run fiscal close process is executing. It is showing progress 50%. It will be keep on updating this one. It will move, it will change the percentage of the progress. Yeah, it is progressing 57.14. It should be 100%. 66.67. It may take 1 or 2 minutes time, please. Okay, it is progressing. This is run fiscal year, batch job is executing. 75% completed. Around 94% it will slow. 81.25. .5. So from this onwards, it will be a little bit slower. It will take some more time for completion to 100%. So today it is 25th of November. It was executing. I'm executing on 25th of November. So from here, it will take a little bit more time to complete 100%. It will take another 1 minute to complete 100%. So from 94% onwards, it is a little bit slower. This is a bad job only. We can't do anything. Let it be complete. It should be 100%. So in real-time scenario, it will take 1 minute max to max, but in this demo system, it is taking more time.
So while it is doing that one, Satya, what is 1, 2,
Yeah.
3 account types? Can you repeat that concept one time, please?
Sure.
Because 1, 2, 3 only carry forward 4, 5, 6. No, right?
Yeah.
Just
So
can you mark it
actually,
up the numbers over there so it is easy for us to remember?
so one is assets. Actually, one series is assets. This is not a thumb rule, but this is a best practice Microsoft follows. One series means assets. Here, assets means all customer balances, or bank balances, or all inventory transaction accounts, all fixed assets balances will be lying here. Assets.
Okay.
Liabilities means vendor accounts, all vendor accounts, all payables, whatever the amounts I need to pay. Means another example, like if you have any loans kind of thing, I can make it here.
Okay.
And equities is like shareholders, investors.
Okay.
So actually, commerce, this is not a separate one. It is a subset of liability.
Okay.
But in Dynamics, it was separated. And this is 4 series revenue. That means through sales, whatever you are getting money, sales value, that is 4. 5 means through cost of material or purchase expenses. Cost of material. This is sales value. This is cost value of the material. This is the sales value. This is cost value of the material. And
Okay.
here expenses means office expenditure, like petrol expenditure, salaries, maintenance expenditure, repair expenditure, travel expenditure, all expenses. To run our business, there will be so many accommodation. There will be so many facilities should be done by company for the employees. All those things.
Okay.
7 is other incomes. Other incomes means it is other than sales, whatever the revenue you are getting. This is very, very less ledger accounts. Example, like suppose I'm receiving interest calculation. I'm receiving bank interest. Some penalty through I'm getting some interest amount. Then it is other incomes. Other incomes are maximum in any client. It may be max to max 10 ledger accounts, not more than that. I observed. Whereas this expenses, it may be a like 200, 300 accounts be there, very huge. Because to facilitate my employees, I need to provide so many. Simple, suppose notebooks I'm purchasing. I want to enter in my system. That is like stationary expenditure. Like so many expenditures will be there. So in all this, the major is this 6 series, the major ledger accounts, and
Okay.
these two. Upper operation is for calculation purpose to get a net profit. To arrive net profit, this is you will get gross profit. From this you are going to arrive net profit. You are doing so many calculations, so many accountants will do. There are a lot of calculations in the upper operation. So
Okay.
example like foreign currency revaluation, if you are running realized gain, realized loss, unrealized gain, unrealized loss, that is not come here. So those accounts, and if it is a taxes you are paying, that one, all these things it will be calculated and they will arrive net profit with this
Okay.
one, with this all
So
calculation. Yeah. Yes, please.
so let me tell in like layman language, tell me if my understanding is correct or not. Okay. I'm just talking from like assets point of view. Okay.
Mm, mm,
So we have like sales orders and we sold it
mm,
to 10, 15 or like 100 number of customers. In the
mm,
customer posting definitions, we have like
mm,
based on customer group or a customer account, we
mm.
map like the posting should be done to so and so like asset account, all the accounts receivable.
Yes,
That,
yes, exactly.
that one, when we are opening up the year, let's say it might be 100 or it might be 0, whatever in the month, whatever
Mm,
the sales transactions hit that particular GL, that will be
mm,
recorded. Let's say it is $10,000. That is
mm.
this month closing balance and next month opening balance is
So
like
in
goes.
that,
It's
yeah, in that, if it is a sales is happened, it is happening with the customer account data to sales revenue account credit. Am I right?
yes.
So customer account will be in one series, revenue account is 4 series. So
Okay.
one series it will be transferred. In the sales, whatever you have taken example, customer account data to sales revenue account credit. So sale 4 series is sales and one series is customer. The customer series balance account, that is customer posting profile, whatever you are mapping, that will be transferred to next year. Whereas sales revenue is you are arriving the profit on this one based on the cost value, sales value minus cost value. So this will not be transferred to the next year. This is sales value, this is a cost value,
Okay. Got
this
it.
is customer.
So basically,
Okay.
three entries we have to like remember, like new people, like not like experienced people. Purchase order and sales order like 80%, and the remaining like each status we have to like understand how the debit and credit hits this accounts. And next step is how to take these
Mm,
balances forward. All right.
yes. Yeah. Yeah.
Okay.
So
Thank you.
basically, because you are from logistics background, so that is the reason you are talking about purchases and sales. Of course, in a real-time scenario, this will be a huge. This will be a huge. Accountants, they will post journals a lot about expenses. Accountants,
Okay.
they will post in daily. There will be lot of transactions. They will execute on this expenses in a day-to-day life. So to run their business, any business, accountants needed accountants. Accountants, of course, they will execute, they will post transactions across, but the major work, their task is on this one a lot along with this. Okay, fine. Let me verify whether it is completed or not. Oh, give me 1 second. It is refreshing the screen. No issues. It most probably it will be finished. So one more thing, from tomorrow onwards, as discussed earlier, I would like to start the session from 6:30 a.m. to 8 a.m. IST. Okay, for few days, for one week to 10 days, I'm combining both finance and T&L. 6:30 a.m. to 8 a.m. Okay, IST. So please join the same link, 6:30 a.m. IST to 8 a.m. Okay, instead of 6 to 7. The current batch we are running 6 a.m. to 7 a.m. IST. This is the current timings as of now, but from tomorrow onwards. Okay. So Avik, I don't think so. There will not be any issue.
No, that's right. I'm fine.
Yeah. Yeah. Okay. Tomorrow onwards. For 1 week, 10 days. After that, I will tell you once again back to our 6 to 7 batch. So run. So it is completed now. Let me verify. So today date, it is 25th November. It was completed, ended 100%. Earlier it is executing. The percentage is keep on changing. I'm logging with admin. So it was completed. Now, if you verify, if I run, then it should balances should be updated, opening balances from last 2017 to 2018. That means 31st December 2017 balances should be shown as opening balances here, but it may or may not show. There is some small bug from my they're working. Okay, so 99% it will not work, because I know like in 10.0.13 version there is an issue. Let me try whether it is resolved here in this version or not. Let me verify. Okay, fine. I think there is no issue in this one. Okay, for this version there is no issue. It was transferred. So if you verify 2017, like if you verify here in this 1 series, 2 series balances are transferred as opening balances. But if you observe 4 series, 5 series, from 5 series, here it is from 5 series, you will not find any opening balances. You will not find any opening balances. Only 1 series, 2 series, 3 series. Okay. And one more thing. Whenever you are executing here, usually I want to consider, give me 1 second. Here you can consider, whenever you are executing, always the best practice is take yes. What is this means? It is consider balance, like business or dimensions, whatever dimensions are there, dimension wise balances should be transferred. What does that means? Suppose here, take the example, suppose bank account. I have bank account with the business unit, bank account with business unit. So if it is transferring from last year to next year, I have 2 business units. One is in business unit means branch. I have one is Amirpet, suppose. Another one is Dilshuk Nagar. I have 2 branches. Then these 2 are business units. So the bank balances business unit wise, whatever it is there, it should be transferred to the next year. It should be transferred to the next year. So business unit wise or department wise balances should be transferred to the next year. That is here. So the best practices always take yes, transfer balance sheet dimensions balance sheet dimensions, yes. So in this it was not selected, it was selected as something no. This is not the best practice, I'm telling you. In real time scenario, always you need to select yes. Financial dimension wise balances will be transferred to the next year. Okay, so if you want, you can observe any one account. Suppose I'm going to very first, I will take another one more trial balance, general ledger, inquiries and reports, trial balance. So I will execute for 2017, whereas it is, if it is India, it will be April 31st. Okay, from Jan 1st to April 30th, March 31st. I'm sorry, Jan 1st, April 1st to March 31st. It is, if it is India, this is US. So here, look at this one. Closing balance is for 2017 7761598.44. That will be 7761598.44. The closing balance of the last year is transferred to opening balance for the new year. This is for 2018. This is for 2018 and this is for 2017. So simply you need to run this year-end closing. So in 2012, you can execute for, if you are in USMF, you can execute for only USMF. So I told you retained earnings, that is this one account. Okay, so you need to click new and you need to select the company name and you can select the ledger, legal entities. Legal entities means companies. Legal entities means companies. Okay, so simple, you can run this one. Here you can click run fiscal year, select the legal entity, click OK, and select the financial year, which year you want. In 2012, you need to select the manually the last day of the financial year. Here it is not required. Here it is not required. It was modified. In 2012, you need to select manually the last day of the year. System will provide you, you can select any date, but here nothing. It is last day. If you select year, automatically it will capture the last day of the financial year. No issue. Here there is a bad job. You cannot execute without bad job. It is must through bad job. In 2012, you can off this one also. It is not mandatory like bad job only. It will execute directly, but in majority, in D365, majority process are bad jobs. Just now we saw. If you click OK, it will be executed on bad job. Understood? The year-end process, very simple. You can run this process and it will be opened. So here opening balances means, as I told you, in period 0, the balances will be stored. The balances will be stored in period 0. If you are posting any transaction, then it will be in period 1, period 2, period 3 to period 12. Period 1 to period 12, the transactions will be posted. So if you want to understand a little bit, let me show you all transactions here. So you can look at this one, operating. Operating means you have entered. Opening means system generated balances. System generated balances. Understood? Opening, this is operating. So you will find opening, operating and closing. So always the transactions will show. Opening means you are not entering manually, that is through year-end process it is coming. Opening. Operating means you have entered with one journals, manually you have entered transactions, then it is operating. So if you look at these types, you will find opening and operating. Okay. Closing, actually, that closing is one more type is available. That closing type I will explain after some time. Most please, now time is not sufficient. We'll discuss this closing later. But now we have discussed one is this is opening, and these all are operatings up to 12. And this is closing also is there. This is type is closing. So that closing I have not explained. I will explain you after some more time. After some days, we'll discuss once again about this closing once again after some time. Okay, fine. I'm stopping here for today. We'll connect once again tomorrow morning, 6:30 a.m. IST. The same link. Please join at 6:30. So don't expect 6 o'clock. Please join at 6:30, 6:30 to 8 o'clock. Okay, fine. I'm stopping here for today. We'll connect once again tomorrow. See you. Bye.
Thank you. Thank you, sir.
Yeah.